Okay, let's kick off, shall we? So, firstly, I would like to express my gratitude towards Al-Mashura and sincerely apologies for the absence of our CEO, Rowan Brewer, who at the last minute had to engage in a critical business meeting. Nevertheless, I'm sure this is one of the many webinars, and you'll get to hear from our CEO, Rowan, pretty soon. So, thank you for joining this session. We will be talking about digital transformation, innovation, regulation, and some of the trends of the payment industry. Um, at the end of the day, what we really hope to achieve is to share the wealth of our knowledge, our experience to the audience who are watching live and probably will be watching later on, so that we can collectively grow the payments ecosystem. I'll start off by quickly introducing myself. So my name is Naman Hassan, and I'm the Regional Director at Paymentology. For those who do not know Paymentology, we are cloud agnostic, API-driven global issuing processor. And we are actually engaged in the lot of, we are enrolled in a lot of FinTech Express programs such as Visa Ready or MasterCard Engage. We operate in a SaaS model that enables FinTechs and digital banks to quickly transform and offer innovative products and services to their customers. I have my colleague, Somu Roy, who is heading the global partnership division at Paymentology. So without wasting any time and straight away getting to the business end, it will be great, Somu, if you can quickly introduce yourself.
Thank you, Nauman, and thanks, Al-Mashura. It's a great privilege to be here. Shomu Roy, I run strategic partnership for Paymentology and SaltPay, which is the group company. In terms of background, I come from GE Capital in US, 10 years in MasterCard. My last MasterCard role was running Qatar, Kuwait, Iraq, and Levant. Then joined Tutuka and Paymentology, and I'm delighted to be here.
So, Somu, I mean, it's great that you have mentioned that you have been in industry and specifically in this region for over 15 years. So just to highlight or maybe give a summary of how do you see the trends changing or the payment industry transforming in the last 10 years?
It's a great question, and Norman, I mean, I would split it in four parts, and a path-breaking change, what we are seeing, which is democratizing the neobank and the fintech, and you see a plethora of them. It's IT cost. I mean, since you mentioned 15 years, I mean, 15 years back when we first looked into this region. And I was speaking to one of our very large client from this region who runs neobank and started fairly early. And he mentioned a very interesting point that 15 years back when they were planning to enter into this journey, the first $3 million they raised, it was all getting into IT infrastructure, Sun Microsystem, IBM mainframe, Oracle. In today's world, you can have a $200 AWS cloud monthly subscription and get ready and jump in. So this flexibility has kind of enabled the road of the fintechs jumping in. Then we looked into, and you also mentioned our company, Paymentology, in software and service. I would look into like 3-4 parts. Banking as a service that started in Europe, coming in a big way, where non-banks kind of connects with the banks, creates API and provides solution. Card as a service, which Paymentology is in forefront of, in US Marketer does it. And things like another client of ours, Rapid, whom we proudly process, which is fintech as a service. Like fintech can focus on what they're good at, and their entire backbone of how will you get a BIN sponsorship, how would you kind of settle payments, that leave it to in experts' hands. So I think it's all together created this democratization of fintech neobank in this region, and lastly, the very, very favorable regulation. Central banks are looking into it. Qatar Central Bank has opened up sandbox and a lot of favorable entry points. So is a lot of other GCC central bank, and sky is the limit from here.
Perfect. That's obviously music to my ears as well. Let's break down whatever you said into various questions, but straight away jumping to probably, we are stepping into 2022. 2020 was struck by pandemic, though our payment industry flourished, to be honest. And since then, the innovation is it's basically going to the sky, as you say. So just if you can pinpoint some of the trends of the payment industry that we see stepping into 2022, what will be they what they will be, if you can highlight maybe three or four.
Yeah, I would say about there are five which I can think of. It's a beautiful ecosystem is emerging. Um, One, I would say a big thing is from denial to acceptance. You mentioned we are part of MasterCard Visa program. I remember 3 years back, in every platform, a MasterCard Visa will say no to crypto. From there, if you look at last week's LinkedIn, the MasterCard CEO, Michael Maybach, is talking about, hey, today I used a MasterCard and bought an NFT. Visa is in the forefront of blockchain and other technology. So from something which was a taboo, now it's like how we can partner and grow the ecosystem. Second piece will be PSD2 and open banking. It started in Europe. It's going to come up. Bahrain came up with an open banking solution. A lot of regulators in GCC is looking into open banking, which kind of narrates to big data, the power of data. And I'm sure later we will talk specifically about data. The other beautiful part is checks and balances, how regulators are looking into it. And it's going to come more and more. And I'll see it in two parts. It could be in Qatar to run an ecosystem. It's not only MasterCard Visa, you need to be integrated with QPay. I mean, we at Paymentology take pride on about integrated with 20 local kind of switch across the world. So I think that's going to come up in a big way. Some of the smartest regulators are in GCC, and GCC regulators are also looking into how they can enable fintech, democratize it, but also at the same time, again, I said checks and balances, be careful about, is there too many banks in the market? Because the market size is restricted. And there, if you recently know, one regulator kind of said, digital banks, this is the limit, get a new license, get a license for a bank which is not operating in this space and idle, take its license. Those kind of M&As are happening. So a lot of M&A and consolidation on that side. And more amenable data hosting. So some countries have data hosting restrictions. Somebody says on sale, but you mentioned a brilliant point on we are cloud native. And if you look at Saudi Arabia and multiple countries coming on under that area, local clouds, similar things coming in Indonesia. So instead of on soil like brick and mortar, we are talking about on soil in the sense a local cloud kind of thing. And the last thing, it's a debatable topic, but I love one of the Bill Gates comment. I'm nobody to justify it, but the thing is, Bill Gates once said, we all need banking. Consumers need banking solution, but not necessarily banks. So in some shape and form, every customer needs it. It can come from fintech. It can come from insurtech, alternative finance, crypto, blockchain, but sky is the limit. So I think these are the 5 areas where we see more of the innovation emerging.
Those are 5 good areas, but at the end of the day, you have to enjoy the banking experience, right? And for that, you have to create good customer experience, and
Absolutely.
plus the convenience. Those are the areas that are driving the flow. But in general, one important point, I think, what we need to realize, maybe rewind 15 years back, when you look at the top 10 companies, you see a lot of banks, you see a lot of petroleum, you see a lot of finance companies. But now, if you just look at the top 10, you see big tech, right? You see Apple, you see Alphabet, you see Microsoft, you see Amazon. And the best part here is that all these companies are getting into finance. So this is where I think innovation, this is where the trust is. And it's great to see. We are looking at Generation Z, we're looking at smartphone technology, and that's where the trends are changing. And it's pleasing to the eyes, to be honest. So there will be times where there will be a transition from cards to maybe codes. And what we are doing at the moment in Paymentology as well is we are actually using tokenization modes of doing payments. And the acceptance is increasing, and plus obviously the dominance of mobile wallets is increasing. The tech savvy, the customer centric approach is more applicable. So definitely, I mean, banking is changing big time. The future probably the bankers of the future will change. And at the end of the day, I think the shape of the industry probably it will be shaped up by more designers, maybe programmers, or creative thinkers. So some of my favorite topic. Let's jump into Middle East, because that's basically an emotional thing for me as well, being here for long years. So we do see a sudden boom in digitization. What is your take on that? Why all of a sudden, everyone is talking about digital bank, neobank, challenger bank, so many startups coming up. It's like a mushroom effect, right? So what do you think? Uh, why abruptly? Why now?
Great question. Actually, it's globally true, but of course, definitely on Middle East. Number one thing is consumer. Like if you have a teenage kid at home, and if he or she brings their friends, the first thing they ask is not water or tea or Coke. They ask for what's the Wi-Fi password. So I think 5 years back, we talked a lot about smartphone penetration, but what revolutionized this piece is democratization of internet. In multiple countries, they're talking about internet as a kind of right, like same as food and water. And this democratization of internet, because smartphone with a very expensive data doesn't take you anywhere, but this omnipotent, omnipresent Wi-Fi internet connectivity gives this tool. It's not only millennials, to the teenager, the generation which is just coming into the employment. They don't want to go to the branch. I mean, if you look at the branch penetration and the kind of demographics that come to the branch, it's completely different. So I think consumer choice, and as you know, Middle East has one of the kind of youngest population globally. And that youth is driving a lot of choice, a lot of preference, and I think consumer playing a great role. The second is very, very, very favorable regulation. I mean, I was fortunate enough in my last previous role to meet the ex central bank governor of Qatar, His Excellency Sheikh Abdullah. I mean, and in my chat, his first sentence was, "Change is the only constant for us." I mean, if a central banker is thinking on that way, I mean, in UAE, we look at central bank in partnership with DFSA, which is the DIFC. They are now focusing on the funding of the fintech, so that the fintech not only gets licensed there, they help them to grow. QDB in Qatar is kind of creating this sandbox. So regulation and government favoring fintech and the growth, coupled with the consumer choice, it's opening up kind of infinite opportunities. And last, as I mentioned, this, instead of this big hardware for $8 to $10 million, now you can buy this piecemeal stack. Like you have cloud on the Amazon and Azure. You have eKYC solution. Like KYC, before your bank used to have 40-50 people to run their KYC. I was listening to interview of one of the large bank CEOs. He said physical KYC is dead. Almost all banks has moved to eKYC. There are brilliant platforms and all. And this stack-wise purchasing of platforms and kind of on a software as a service, so that it does not hit you with a bulk $8-10 million cost, it takes out the barriers of entry. And as the barriers of entry moves out, as you rightly said, the future is the coder. The future is the customer experience specialist. When I was speaking to one of the ex-banker, and he said, nobody is now bothered about where my branch real estate will be. Will it be first floor, second floor, which road? Will it be Ring Road, Sheikh Zayed? I don't know. What's more important, in your home screen of your iPhone or Samsung or Galaxy or whatever, if that app is in your home screen. And that real estate is everybody fighting for, and that's where we're heading.
Absolutely. I mean, there are a couple of things more. Number one is definitely there is a lot of emphasis to diversify the economy. The governments are playing their role for sure. From energy sector, it's more towards technology. Private industries is investing, and there is encouragement. It is delightful. There are a lot of innovation hubs. And as you rightly said, the governments are investing. That's number one. The expat populations, definitely that drives a lot of remittance, the number of transactions. And people are tech savvy here. The Generation Z, as you rightly said again. So Generation Z is something that that needs to be targeted. The smartwatches, the smartphones, the mobile apps. You can actually do the transaction, contactless transaction. So all these are basically encouraging signs. And plus, if you look at it, maybe 15 years back, I would say that most of the innovation, most of the technology probably was happening in the UK or maybe in Germany, right? It was the hotbed back then, but now slowly and gradually, this region that has huge potential, we need to tap, and people are realizing that there's a huge void here, and that's the reason why a lot of companies, specifically from outside the region, they are trying to invest. More importantly, I think the success of the likes of Revolut, right, for starting from a startup, then now going towards becoming a neobank and probably a challenger bank, looking at the population, that has also, a good that has also provided a good case study. Marks Bank, Standard Charter, you look at Starling banks, these are good case studies, and definitely people would like to replicate the same success story. Not only replicate, go one up, I would say. So, so that's great. Let's jump straight away to the digital banks and let's do a comparison, right? So you can see a lot of, unfortunately, you can see a lot of legacy traditional banks still, prevailing in the Middle East. Now, what can a bank do in order to transform into a challenger bank? That's one. The bank can transform into a challenger bank. A startup can transform into a neobank, right? So what does a digital bank needs to do?
Great. I mean, I would start by taking a step back. Like digital bank or neobanks don't have a hard and fast model. It kind of runs very differently in different parts of the world. And you also mentioned now all this evolution and innovation is coming in Middle East. So I think Middle East is in a great position to see and learn and what part of the world what's going right and wrong. Like if you look at it in US, the pretty much the digital bank story is that brick and mortar bank, somebody borrows their license with the API and launches a classical neobank kind of thing. Europe is a perfect balance. There are fintechs becoming neobanks, large bank running their offshoot. A very interesting thing came up from India, where, I mean, India is generating one unicorn per week since last year. It's the entire digital bank is payments led. Digital bank is not even bothered about deposit taking and all. And that's why the digital bank story in India is called payments bank. They've been calling it digital bank, neobank versus a payments bank. That's an interesting story. China, a completely different dynamics where big tech, and you mentioned big tech is driving the digital bank story. We are a global company. As you look at some of the RFPs we respond and some of our existing customer, Asia and Dubai, a lot of times, Qatar and others, Bahrain looks at how Singapore and those markets operate. That's a very interesting consortium-led story. So if you see the next 4 digital banks in Singapore are Grab, which is a ride-hailing company, which is the Karims of the world. It's Seagate, which is a gaming company. In Malaysia, the digital bank, it's a kind of an amalgamation of AirAsia. So it will be interesting which companies will jump in. And in Middle East, we are seeing a perfect mix. I mean, if you look at the digital banks let's start with UAE, because I'm based out of Dubai. ADQ, what ADQ is, I mean, FAB, NBAD merger, another banking license. So it's 2 banking license. It's kind of offshoot. It's probably the largest digital bank and coming in. So it's a banking fraternity getting into a digital bank. Zand, which is more like a MR, it's in real estate, this business, they will come in live targeting SME with another format of the bank. So I think in Middle East, we will see most of the mix there. And it could be from banking, it could be from very large retail group. And I mean, whoever has the customer is the king. Whoever has the pull to the customer, they will drive the growth here. I would also look forward to how exchange houses play in. Exchange houses has the captive base, they run the payroll, and I will not be surprised that they come into the neobanking space. Again, they will give the banking solution, banking as a service for those customers. They don't necessarily have to become a bank. So I think it'll become a beautiful mix there.
Yeah, I mean, you're talking about becoming an enabler. So you're offering products such as B2B, apart from B2C. So definitely there's a lot of room. But if you specifically maybe talk about how can a traditional bank probably make that move, what are the challenges that they have to overcome in order to become, what are the risks that they have to take, and what is the future for the traditional banks? So if you can those highlight, I mean, I can for example mention probably the visions, the dreams are important, right? So you mentioned about brick and mortar. At the moment, what a lot of banks are having their own data center, brick and mortar solution. The solutions are from a batch processing perspective, bank back office mindset, but now you have to cater to users who are looking at convenience, user experience, so tech savvy generation. So they have to think from a consumer perspective. That's one. Probably the second can be that you have to uplift the whole technology stack. Look, you have so many clouds coming up, right? You can explore the cloud nativeness, the APIs. I mean, just imagine the power a consumer will have on the fingertips. You can literally, do all sort of operation. This is basically what technology will bring to you. You can do things on a runtime. Probably the third thing can be you have to consider the whole market as a global village. Gone are the days when you're on your own island, right? So you have to get the inspiration probably from what is happening throughout the globe. You spoke about Grab, we spoke about Starling Bank, about Mox Bank, about Revolut. So get the best, learn from them, right? Look at what is happening in other regions and adopt before it's too late, to be honest, because a lot of innovation is happening. So it's like if you don't risk anything, you're risking everything. So those are the types of things that I think. What's your opinion?
Absolutely, Norman, and that has started. And I would say it's the evolution coming in three ways. One is very large brick and mortar bank creating neobank on their own. So before a fintech or a neobank coming and eats their lunch, they are kind of getting into that space. If you look at ENBD, one of the largest bank in Middle East Africa, created Live. Mashura created Neo, which is like kind of their offshoot in the neobank space. At the same time, you must have also seen, as I said, card as a service, banking as a service, software as a service. Those are coming in a big way. And large banks are taking their payments platform and spinning it off. Spinning it off not necessarily means IPO, stock exchange, and all. That's maybe 5 years down the line. Fab, probably the biggest bank in MENA, in MENA, created this offshoot called Magnati, who runs their acquiring business, their wallet business, and all. That's their kind of gateway to the digital transformation. We will see larger and larger banks coming in that space. The third piece is that if the big banks, they have beautiful wealth management business, they have great corporate business, but they might be thinking about, how do I get that flexibility? If I have to launch a new product, and if I'm on one of those archaic platform, I might be 6 to 9 months away from ideation to the first card rollout. And in that 9 months, 10 fintechs can come in, 2 neobank can come in and have a better product. So how this neobanks how the brick and mortar banks prep themselves to have those cloud-based solutions ready, how they connect to the APIs and all, how they create their own sandbox and partner with fintechs and companies like us who can kind of enable them to a faster go-to-market strategy. So I think that's coming in a big way.
Yeah, absolutely. So it's about how fast can you do things, right? Time is of essence, and this is where I think digital banks are ruling the roost. So let's we are talking a lot about innovation, technology, adopting new things. I think it's sensitive topic, but let's talk about regulations because it is important. And plus, the RAC tag is one of the things which obviously needs to be tightened when it comes to the trends. At the end of the day, it's the digital currency, right, that is floating. So, what do you think actually? First of all, the importance, obviously, of regulations, And what do you think? Is it hampering the technology, the innovation in MENA? And mind you, I mean, we have been doing a lot of visits to the regulators in the Middle East most recently, and that's what we should do, transparency. So what's your view actually on RegTech, and then is it hampering innovation?
So is regulation required? Yes. Is regulation slowing down some part of the innovation? Maybe, but that's the beauty of checks and balances. I mean, without regulation, there might be risks which we unknowingly can get into in the drive for innovation. The beauty is that the central banks across the world trying to learn fintech, they are creating their own sandbox. So it's regulators like the central banks kind of putting the regulation, and within the regulatory framework, they're asking the fintechs to operate. And I think that's the right thing. Nobody even 3 or 4 years back thought about that banking can move to 100% eKYC. I think multiple markets and multiple large banks and brick and mortar banks got into eKYC. And there are multiple solutions. We, as the group company Saltpeter Pride, we acquired a company called Mia Wallet, which is getting into this whole eKYC space. And I mean, that's the beginning of the RegTech, right? You take a picture, you take a selfie, your QID or Emirates ID or whatever country's ID, you put it on, they match it, they scan it. And now AI has gone to a level where they can match like 92 out of the 100 characteristics. So it's almost kind of foolproof. So that's a great beginning. But the other piece is that also the fintechs are getting innovative. I mean, I will take an example of Binance. Binance has two, I mean, since somebody talked about crypto, Binance has two levels of eKYC. You want to do it till X dollar transaction, you have a KYC light. You want to do a Y dollar kind of transaction, it's KYC plus, 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 plus. And I think that's the beginning of a journey, not somebody who wants to transfer $5 versus somebody who's going to transfer $100 million needs to have the same level of KYC. And RegTech kind of creates this customization and gives you a kind of playing field for everybody. So you plug in API based and innovation comes in there. And I think sky is the limit. The other piece is partnering. And I remember there's a very large network provider launched something called Card in a Box, which is kind of CAS, card as a service. So they want to go to telcos where, and we won the RFP. So Paymentology is their partner for all Africa and MENA telcos. So you plug it. And there, the networks are also coming in and creating this seamless RegTech. They said eKYC should be part of that proposition. We did not have a eKYC solution, so we partnered with the eKYC partner. So partnership is also going to evolve and create this RegTech evolution, like where processing players like us, either we will acquire, partner, bring RegTech partners provider so that we work and groom inside that sandbox.
That's great. I think what is important here, if you talk about Qatar Central Bank, you talk about Saudi Central Bank, SAMA, you talk about UAE Central Bank, in general, the best thing here is that they're encouraging, and this is what we are trying to reiterate again and again. So they're providing sandbox, they're providing the platform actually to grow your startups. So you have to be transparent because look, all of us are learning together. So it's very important, whatever you're building, you have to be transparent with the regulators. There are licenses in place. You need to understand the regulatory requirements. But at the end of the day, I think you have to find the right balance. That's very important. The second thing is I spoke about digital assets. So they are inherently open and global. So need for regulation is definitely something which is a requirement. And look at the fast pace, the innovation through which it is tackling various challenges. So you need to make sure that the framework, it's under that framework. And when we talk about framework, there needs to be cohesion. Look, there is PSD2, there is 3DS, there is GDPR. So everything is coming, open banking, everything is coming, let's say, from Europe. Now, obviously, we have to be coherent. We need to have a global framework. So we need to make sure that we implement the same. I spoke of global village, and this is one example of a perfect global village. So the framework need to align. And you spoke about Bahrain adopting, or rather, making the open banking document regularized. So it is coming, and we, at the end of the day, it should be a problem if it is for the global, in a global sense. And I think, yeah, we need to just strike a fine balance. By the way, before I jump to the next question or next topic, let's quickly discuss. I think there was a question around the ecosystem in India, the banking ecosystem in India, and why is it de facto why are the platforms that are from India becoming a de facto digital bank, or maybe they are powering the digital bank. By the way, I have my reservation because I tend to disagree, but yeah, I mean, what's your view on it?
I think the biggest difference between India and the other markets. So by far, India is now creating one unicorn per week, and what's driving it? It's the sheer population, and that kind of, because digital bank is a lot about scale, and when you get a large scale, like even if you make, I only want to target between 19 and 20 and a half. I mean, still that base is very large. And if you get 5% of that, that's big. So that scale is definitely helping. The second thing is in the payment space, there are multiple regulations that came in, and which is helping. The number one, and I'm not getting into if it's the right regulation or wrong regulation. Overnight, some bunch of currency got kind of dismissed. It's demonetization to stop black money and all. Everybody has to use a card. Like if you don't use a card, there is a period of time there was no cash accessible. It created a lot of other chaos, but it kind of increased the transaction penetration in not percentage increase. It became manifold. The second thing is then that everybody needs to have a bank account. And if a 1.2 billion population has a mandate that everybody needs to have a bank account, then it just puts it. So from 400 million bank accounts, it suddenly becomes 1.2 billion bank accounts, like insurance payment and stuff. So that needs to be serviced by somebody, right? The brick and mortar banks suddenly cannot service a 800 million incremental population. Third, there were fintechs that were grooming in the market. They took the opportunity. They kind of jumped into that space. By the way, the regulation is not easy. The regulation is extremely strict. Their data hosting is no cloud. It's data hosting there. It's one of the country where MasterCard got banned last July, and it's 7 months. So they do take bold steps. But I think the scale, number one, the innovative platforms that's available. And the third thing is government creating this spin-off of payment entities like NPCI, who has their own payment scheme like RuPay. They're creating bilaterals. So for example, if you go to Expo, you don't need a MasterCard Visa. You can pay by a RuPay card because they're now signing up with the large acquirers in Middle East, North Africa. So if you look at the remittance, the next phase is the remittance that's coming in. So this bilateral tie-up, and I mentioned how the evolution will happen. Bilaterals will get very important. GCC Net will be the huge power player. Maybe GCC Net will tie up with another switch in Africa and will be bigger than Discover. Like that kind of thing we are seeing more. So it's scale, government push. I will not only say support, it's push, like mandates. Those two together kind of coming in this way. The last piece, I think I mentioned, the banks there are more payments bank, all of them. And that's the word they use and not neobank, because there is a huge sensitivity on deposit protection in India. Almost all deposits are insured, and post 1984, no banks have the risk of kind of shutting down and somebody loses the deposit. So that's why there is a hypersensitivity around deposits. So deposit taking is a sensitive area, and that's why everything went on the payments is this thing. It would have been a remittance play, but India is more of an inbound remittance. It's not outbound remittance, so that area didn't come in.
Okay, so we have quite a lot of questions, by the way. So let's take them one by one once we,
Sure.
in the later half of the session, the Q&A session. So that's great. Now, obviously, from paymentology perspective, we regard data as one of the biggest assets, and we do a lot of analytics. We actually provide a lot of information to the banks or maybe to any other players that can use the data and offer product services, and so on. It's basically the analysis, the pattern, the spend pattern, for example. So keeping the data, and data is in essence, keeping the data in your mind, what is the importance of data in digitization?
I mean, in today's world, data is everything. I mean, this quote very famously floats around, data is the new oil. And I heard it in a conference in Saudi Arabia, which is sitting on the oil. So if Middle East feels data is the new oil, it's really data is the new oil, because that's where it's coming from. It plays two ways. One, there are data-centric fintech that's coming in a very big way. I mean, if you look at Credit Karma in US, they have a very interesting model. What Credit Karma does, you submit the data, they give you a free credit score. But in exchange, they hold your data and they monetize it. They give you product offerings and stuff like that. In Middle East, in MENA, if you see some of the largest valuation of the companies, of the fintechs and the neobanks that came, it's by monetizing the data. So it's not only storing the data, it's monetizing the data. I mean, Cars24, Insurance Market, Sukalmal, Kareem, Uber, their future of the super app, that whole ecosystem and their valuation is data into the alpha. The alpha is the monetization factor. So as you grow data and meaningful data, that's where the valuation comes. And that's why it gets very important how you capture the data. Paymentology, I mean, takes pride on the data fluidity on the point of sale and in every interaction, how a bank can capture customers' data. And that opens up a very interesting topic. I think in the essence of time, we will not get into the detail. In LinkedIn, every other day, you will see a vote, is BNPL gonna eat credit card? Because BNPL is the new player. I mean, it's globally Klarnas and all have the best valuation. Why BNPL could come in and bite into the credit card revolving space? Because credit card companies or so-called banks were holding all the data, but was not massaging them and was not customizing the offer. CRM, big data was prevalent, but people were not using it. So two parts, capturing the data and how you massage the data. I mean, we have multiple tools by which X bank at the time of the point of sales can see that customers' age, gender, demographic, credit bureau score, the transaction size, SKU level data, what he's buying, and he can push a payment installment notification that point, not that after 3 days a call center calls him in his busy time, and use that moment of truth to make him do the installment. If banks could have done that, maybe BNPL wouldn't have come and bitten into their lunch. But it's capturing data, massaging data, and how we take it. And it is the new one.
By the way, another good topic, buy now, pay later. I think we should touch this topic later on, but I mean, it's worth mentioning here that, you know, schools of thoughts, different schools of thoughts. So at the end of the day, what is buy now, pay later? It's a credit, right? Yep. So what makes it big? The whole process. You go to a bank, a small entity goes to a bank, and a person actually goes to a bank and say, okay, I need this amount of loan. I mean, you will be spending like what? Your energy, your time, and plus at the end of the day, you'll get the loan probably what? After 5 days, after 6 days. If you're lucky, you'll get it after 5 days. With buy now, pay later, it is so easy. So the ease of getting things done is important. Yes, obviously, after all, it's a credit. It should be taken as a loan. But yeah, that process itself is appealing. The convenience is appealing. This is another example of why innovation is helping consumers to, you know, do things faster, or you know, it is appealing. So that's one thing.
The beauty is that you captured the data at the right point. And you mentioned large brick and mortar banks, right? I paid my daughter's school fee last week. And a large brick and mortar bank, because they have archaic system, the CRM team probably only could see the data yesterday. So after 6 days later, they called me when I'm on a conference call and asking me if I want to do the installment. If they would have had, I'm jokingly saying, a paymentology solution, a cloud native at that moment, you would have known that Shomu has paid X amount of money and the school, this is Shomu's credit score, his DBR is 0, I would have got an immediate push notification, do I want to do it in 3 installments? So that's the power of the data at moment.
Absolutely. And one important thing from, let's say, from a bank perspective, or maybe from a fintech perspective, the amount of data that you're getting, look, you don't need to build your own data warehouse after all, right? You're getting the data. You exactly, small examples, you will know that what are the top retailers, for example, how much money you're spending on those retailers. You can go to those retailers, offer products, offer co-brand cards, or maybe you can work with them, partnership. Then at the point of spend, if you know that the customer, what is the spend patterns of the customer, you can actually offer that customer discounts, or maybe you can offer that customer better products. If you know that the customer is loyal, you can offer to probably elevate his portfolio. You can play a lot with the profile. I think at the end of the day, the control, the information is vital for the banks, or maybe not only for the banks, but also for the fintechs, as I say. So it will enhance, or it will make your product go in the right direction as far as obviously upsurge in technology, or maybe the demand, or maybe the market. Plus, more importantly, you need to understand that most of the banks that we work with, they do plan to expand. One example can be that, okay, for example, if you want to go to Egypt, you know exactly there is a high demand. So most of our clients who are based in maybe Saudi, Qatar, or UAE, the first country that they wish to go to is Egypt because it's untapped. And how do you know that? Because obviously you have the data. And what are the type of product that you would like to spend, or you would like to offer to the client? It's based on your analysis. It's based on what you know, and this is what is driving the expansion as well. So data is very important. More importantly, I mean, just to give you a few more examples, you have a mobile app, right? You take the mobile app, you can actually use the mobile app, and if you go to Carrefour, or maybe you can go to any Sharaf DGs, or any other electronics store, you can actually, at the point of spend, you can get the loyalty points. You can get a lot of other marketing tools that can be done based on the data that the entity possess, or the digital bank possess. So yes, that's pretty important. Then, I mean, what we are stepping here, Somo, and obviously you're leading the global partnership division as well, and so this discussion is mainly towards that. So how can the payment ecosystem expand together, right, and expand further? Because at the end of the day, right, it's basically, like I said, it's a global village. It's basically different entities, for example, card pursos, for example, schemes, or maybe we have processors. There are so many startups. So how can we together grow and expand further?
So the beauty is, Norman, in the partnership, and we take partnership in 4 verticals, and that shows the power of the ecosystem and how we are trying to leverage it. Number one, a key part of the partnership are the networks. The networks includes local switch like GCCnet, QPay, central banks, like who runs the local ecosystem, MasterCard, Visa, Discover, China Union Pay. You cannot be like one size fits all. I mean, we are a global company. You cannot launch a digibank in Hong Kong without Union Pay. You cannot launch something in Middle East, North Africa with MasterCard, Visa, and the local switch. You cannot do in US without Discover. The second piece, and a big part of the ecosystem, are these large consulting companies who are kind of consulting the large brick and mortar banks on how to do their digital transformation. And we partner with all of them, from PwC to Oliver Wyman to Accenture, and how we help large digital banks going through the digital journey. The third piece is ecosystem player. And when we say ecosystem player, ecosystem enabler. And I will give you, without taking name, one of our very large customer who is trying to launch the largest digital bank in Middle East Africa. Now, he cannot operate with this old archaic core banking system. So his options are the new age core banking system like Temenos, Mambu, Thought Machine. And what we are trying to do, we are trying to partner with all the 3 and kind of pre-integrate ourselves with them. So when this digital bank wants to go live, it's not he has to do a core banking integration and a payment integration. It's kind of plug and play for them for the entire journey. And the last piece is the influencers. The ecosystem has multiple influencers, and there is a lot of work going on how we partner with the influencers on driving the ecosystem, like bringing the thought leadership. Like today's discussion, it's just a showcase of one of our partnership, like how we partner with Beit Al-Mashura and kind of bring knowledge, thought leadership, exchange ideas, and groom the ecosystem and drive growth. So I think one person cannot finish everything. And when I say one person, one company, one organization, it's the partnership that will take our journey forward. In the essence of time, maybe we need to start taking
Yeah,
questions.
but just my 2 cents on
Yeah,
that, and
sure.
yeah, I mean we should take questions now, but yeah, in general, a partnership definitely it is the right way, but also diversification of industry is very important. We should, for example, healthcare, retail, tourism, agriculture. We have to see where the opportunities are and avail them. I mean, the industries are huge. We just need to make sure that we tap them accordingly, and plus again, as I said, that the ecosystem is huge. You know, you can be the jack of all trade, right? But you are master of none. So you need to understand where you're good at. You need to focus one step at a time, do SWOT analysis, see where you can into the market, where you can do partnership, and yeah, you grow together. Last two things, probably it's the distribution of knowledge, and this is what we're doing here. It's a perfect example, right? We want to build the ecosystem together. We want to expand together, and this is a prime example. And yeah, at the end of the day, for everyone who is also listening to us, I think do not stop learning, and it's for us as well. We don't stop learning, and you know, we have to innovate accordingly. You have to walk shoulders to shoulders, otherwise, you know, the world will go to the next level, and we will be stuck
Absolutely.
with our eyes closed. Fair enough. Let's, in the interest of time, I think we should take the questions. Interesting question, by the way. List the top three upcoming digital banks in the Middle East. I mean, look, so I definitely you should reply to this, but trust me, the number of applications that are filed with various regulators. I mean, I know for sure. Forget about new banks. Every traditional bank is also trying to open a challenger bank on its own. So they are trying to experiment. If they don't want to take major risks, they're trying to open a challenger bank in parallel. So that's one thing. I'll leave the state to you. I mean, you can just mention a few.
So three upcoming digital bank, definitely I can think about Edicube in Abu Dhabi, Zand, which is coming from MR. These are like pure with a separate banking license. I definitely know two coming in Kuwait, but they're in stealth mode. So we cannot mention the name. Qatar, one is grooming. Bahrain, Ila is already there, and another one is upcoming. But yeah, Saudi, two of the very big ones I can think of, STC Pay and Saudi Digital Bank. These are the two very large digital banks. So yeah, MENA is growing super fast. Egypt, it's just a matter of time because unicorns have surpassed like Decacorn and 4 billion, 6 billion valuation. They have the large base. They can provide the whole payment ecosystem. Fawry is one of our customer. I'll not be surprised if Fawry becomes a digital bank one day because they kind of provide almost all banking as a solution. So yeah, almost every country having their representation.
I mean, at the end of the day, just taking Revolut for example, they never intended to become a digital bank, but the number of consumers that they had, now the regulators are asking them to take the banking license, right? Right. So it's
Exactly.
just a matter of time, and definitely you will see a lot. Qatar is definitely one country, huge GDP, huge potential. You have so many events, FIFA is happening. I think the time is right. This is the time where you should look to digitize as well, and definitely there are a lot of banks who are looking into creating challenger banks or neo banks of the future. So that's as far as the upcoming Middle East banks are concerned. Just one thing, so I mean, I read a comment actually on chat, the question. So it was like, you know, getting the salary into the bank. There are regulations, you know, wage payment protection, right? Protection systems. So is that hampering, by the way, digital bank? This is one of the questions. I mean, I have my
This,
point of view, so go
yeah,
ahead.
this is it's a very debatable topic. This is hampering. Why it's hampering? Because, I mean, I was in Qatar. Um, my biggest client used to be QNB. I cannot get a QNB card because my salary used to go in CBQ. But that's a very Middle East, not, it's a GCC challenge predominantly because of such large expat community. They come, move, and go out. And if you speak to any CRO of any large brick and mortar bank, they get panic if you don't see the salary because you don't have a history. It's actually, if you see in some way, this also holds in US. They don't say that I need your salary account, but I was having a pretty decent job in New York, but because I did not have a credit score, I will get declined. So building this credit history, it's a challenge. That's why the companies like Credit Karma came in US. But I think the piece that can solve it, it's PSD2, it's open banking. If open banking in some shape or form, and I know a lot of regulators and have different view on open banking, can stay in the Middle East, Africa, or the GCC markets, that where suppose in Qatar, a CBQ can see your salary even if it comes in QNB under a regulated environment. I mean, it should not be like screen scraping and everybody has access to everything. I think this will solve it. So is it stopping innovation? Yes. But I am sure regulators are looking into it, and an open banking kind of approach or a Credit Karma kind of company can come in and solve it to a certain extent.
Okay, so the other question was around go-to market strategies for a neobank. So to serve the low profile SMEs. So yeah, I mean, what are the typical clients, I would say, or the typical products that a neobank can offer? I will
I think
phrase it in
that's
this
a
fashion.
great question, because I mean, rightly asked in the question, there is this concept that prevails in our mind. It's neobank means it's Gen Y and everybody with app and doing lots of transaction and remittance. And what about the SMEs? And that segment, I don't think was served by neobank even 5 years back, but it's coming up. I mean, Revolut and everybody, they now have launched their business vertical. But more importantly, I want to talk particularly about a case study of one of our clients, one of our largest clients, and bring it to life in Middle East, North Africa. So we processed for a very large bank called Stone. In Brazil, it's IPO'd in US. It's valued at 30 billion US. So it's bigger than a lot of banks in MEA. What Stone did, they came up with this idea that, okay, neobank is always targeting to the end retail customer. What about the merchant? And what Stone did is, suppose I'm a merchant, I accept payment. Now I get my payment, I accept cards, and that comes through a bank account. I don't need always a bank account. What I need is a 16-digit number. So somebody swipes, uses payment gateway, and two, as a small merchant, gives the money. I can give you, the bank can give me credit depending on my transaction history as it's coming, because my point of sale or the gateway captures it. I can have an app, and if I'm a small merchant, I have 6 employees. That 6 employees can have another sub 16-digit number where I can transfer their salary because they don't have a bank account. They can have their remittance platform attached to this. So what Stone created is a merchant-focused super app which kind of manages small merchants and their employees, including remittance, credit, and everything. So that took shape in a big way, and it became a best practice. Here, as I hear music to my ears, and the digital bank that's getting launched by MR, it's starting with small merchants, and then they will go to retail customers. So I think that's a refreshing change, because that was a untapped area by digital banks, and I'm glad it's now getting addressed.
I think most of the digital bank that we are working with, that we are empowering, their first target is B2B. So, and then they will go to retail customers. So yes, the trend is changing, but definitely, I mean, it's not a showstopper. Definitely neobanks can target B2B or B2C. The other element is, fair enough, banking is okay, but a lot of, I would just fintechs, they want to get the EMI license, and then they have a vision of actually within 3 to 4 years get a full-fledged digital banking license. So this is where the transformation is taking place, and this is exactly following the route, the path that Revolut took. So yeah, definitely. I mean, it's not a showstopper. As I said, you just need to have the right vision. You need to dream big, and you'll get your you'll get your solutions. By the way, I'm reading some comments. Look, at the end of this session, we will put down our contact details. You're free to actually contact us if you want to seek more information about us, about our services, or maybe anything that you would like to know. We're more than happy. So it's not the end, by the way. So we are at your disposal whenever you need. So yeah, let's pick a few more questions before we can end this. There were some questions, and okay, crypto is such a big word, big buzzword, right? So what is your view actually? Because obviously adoption is still, a lot of processors, even Scheme, they're in the process of adopting this. It is still something which is, in the cloud, I would say. Yes, it is. It is getting there. You can, there are regulations that are enforced. So what is your view on this whole crypto? And in terms of Middle East, how do you see this, the crypto being the mode of doing transactions, I would say?
So crypto is here to stay, and it's going to grow. I mean, now gold, the bullion standards are over, so USD is the only benchmark. People finding crypto rightly or wrongly as a safe haven, people will transact, it will stay. It'll be very interesting how regulators will look into it. I mean, I was in Latin America last month, and El Salvador moved to 100% crypto. They killed their own currency. I don't see that kind of radical actions coming anywhere in Middle East Africa. But under a regulated environment, crypto is here to stay. People will transact. Mastercard Visa got open from the earlier restrictions to going there, but current situation, crypto transaction is extremely expensive. We probably won't need a Robinhood to come and kill that crypto transaction fee. But even in the best websites and the crypto channels, banks are putting a lot of restrictions. For example, if you use your credit card and you don't revolve, a crypto transaction is considered as a cash advance. They charge you interest. These kind of things, I feel it's relaxed a lot, will eventually move away. If you do a bank transfer, your money in the crypto transaction happens after T+6, which T+6 should not exist into 2022 in anything. In 6 days, a crypto price goes in completely different way. So I feel crypto is here to stay. There will be more regulation coming because the surcharges by banks and all needs to go over. But I have to say that some of the Gulf countries have the most flexible crypto regulation. I mean, cash out of crypto is a big thing, which is very severely taxed in multiple other countries in Europe and US. That shows MENA is coming up as a big crypto cash out zone. So crypto is here to remain. I feel regulations will get stronger, and I feel the ecosystem has to get more cheaper because this time a kind of obscene fee should not exist.
Perfect. And interestingly, we got another question. Upcoming B2B digital banks. I think we just spoke about it. One thing is important. Let's not restrict B2B or B2C. The banks that are upcoming, they can offer both, and that's their strategy. Most of them are going with corporates, obviously, and then later on they will be open to retail. So yeah, I mean that's a strategy from bank side. In terms of technology, if we talk about paymentology specifically for us, I mean it's we don't see any major difference. After all, it's a bin that you get from the scheme, obviously, and we can offer both the products under one umbrella. And furthermore, just to let you know, since we're talking about products here, I think we are quite unique here. And this is when we spoke about learning the market, learning the tapping and trying to do what you are doing best. I think as paymentology, we are offering prepaid, we are offering debit, we are offering credit. Under credit, we're offering revolving credit, the standard one, and we are offering murabaha, which is quite unique. And this is probably something that we have done because for us, Middle East is a hub, and we would like to cater, or we would like to tap the markets, and that's the reason why I think I won't restrict it. Coming back to the question, I won't restrict B2B or B2C. I mean, it's something that the bank can exercise, and as long as you have a player, a partner who is willing to go an extra mile, who probably is agile enough to offer services in timely fashion, you can get wonders, you can get things out of them. Right. So we are out of time. So if there's anyone who would like to get in touch with Paymentology for business or for partnership, please feel free. You can get our contact details from Al-Mashura, and I think they will publish it as well. And definitely, as I said, that this is probably the beginning. It's one of the many webinars that we will be having. You will see different players. You will see more representation from Paymentology. And for us personally, I mean, for me, and someone share your thoughts as well, because we have been in the market in Qatar as well. I mean, Qatar is a major market. I mean, it's it's something that really attracts us, and we would like to digitize the economy as well of Qatar. And if there are any players, any fintechs, any startups, and the digital bank, then we are more than happy to partner with them and uplift their technology stack.
Absolutely. Thanks, Norman. Thanks a lot, Al-Mashura. I mean, as I mentioned, partnership is a key part of it, and only with partnership we both grow. Qatar is in the right point with QFC's regulation, QDB's support, Qatar central banks. I think it's a great market where fintech and both neobanks and fintech will bloom.
All right. So thank you very much.
Thank you. Great seeing you.